Here are my 10 favorite growth stocks to buy in April. I'm going to go through these two by two and they're going to be relatively quick. If you want deeper analysis of any of the companies I've listed here, I've got more videos on them on my channel, so feel free to go for deeper analysis on those. So let's get into the 10 growth stocks to buy in April, starting with Airbnb and the Walt Disney Company. Airbnb is trading at a forward price to earnings ratio of 33, while the Walt Disney Company is trading at a forward price to earnings ratio of 23. Airbnb is relatively inexpensive considering how much the company is benefiting from the pent up demand for travel. Folks are traveling, and if maybe you've heard of the phrase revenge travel, and picking up where they left off a couple of years ago. Overall travel spending collapsed in the aftermath of the pandemic. Now that economies are reopening, travel is coming back with a vengeance. Airbnb is benefiting tremendously. Similarly, the Walt Disney Company is benefiting after having locked down its parks for several months and even longer for some of them. And now that they've reopened, people are coming back, making trips that they delayed, and the company's made enhancements to the business that has made the theme parks even more profitable than ever. The streaming segment, of course, is growing quickly and is expected to become profitable in 2024. It's soon to be firing on all cylinders, not quite yet, but trading at a valuation that allows you to come in before the company's back at full strength. The next two growth stocks to buy in April is Salesforce and Palantir. Palantir Technologies has sold off significantly off its highs. Now is trading at a forward price to earnings ratio of 39.99, and thankfully, management has started focusing on profitability. In its most recent quarter, it had its first ever GAAP net profitable quarter, and the company's forecasting net profitable for the full current fiscal year. Meanwhile, Salesforce trading at a forward price to earnings of 27.45. The customer relationship management company is taking on significant cost cuts and layoffs, which should allow the company to boost profitability in the second half of this year and beyond. The next two growth stocks to buy in April are Microsoft and Alphabet. Microsoft trading at a forward price to earnings of 29.87, which is not expensive for a company that's grown revenue and profits very nicely over the last decade, has a strong competitive advantage in nearly all of the business that it operates in, making it difficult for anyone to come in and encroach on its business. Alphabet, meanwhile, trading at a forward price to earnings of 19.91. Alphabet is the dominant company in the digital advertising industry. Overall, the advertising industry is a greater than $800 billion industry, of which Alphabet is the largest player, and the Google search engine commands a market share worldwide over 80%, and billions of people use YouTube. You're probably watching this video on YouTube, as are billions of people active on YouTube, more than 2 billion monthly active users. This is almost the cheapest you've been able to buy Alphabet stock for in the last several years. The next two growth stocks to buy in April are Visa and PayPal. Visa is one of the most profitable companies in the world in terms of its operating profit margin. The company's spent decades building out its network of merchants and customers. Over 4 billion people have a Visa card in their wallet or somewhere in their house, and that's going to be a strong tailwind for investors. Meanwhile, PayPal is trading at a forward price to earnings of 15, nearly the cheapest it's been in the last couple of years. It's growing. It's got over 400 million monthly active users, adding millions of users every quarter, making it more convenient to spend money online. For that reason, people keep signing up to PayPal. for that convenience advantage, which I don't think is going to end anytime soon. Finally, the last two growth stocks to buy in April are Adobe and Fiverr International. Adobe trading at a forward price to earnings ratio of 24, Fiverr trading at a price to earnings forward of 27. Fiverr could continue to benefit as companies look to hire for specific tasks instead of hiring people on full time. They could go to Fiverr and maybe look for somebody to just build its website, or to just build an app, or to just optimize search engine optimization, or whatever the task might be, instead of going out and hiring people full time because of the uncertain economic forecast in the future. Adobe is benefiting from the increasing amount of digital creations, digital creators, and its services are becoming more and more in demand, and it's best in class really if you want to create digital digital art, digital anything. Adobe is the best in class. There are some that are easier to use but less comprehensive. Adobe is the best. So if you want to upgrade to the higher level of creativity, Adobe is where you would go, and trading at a relatively favorable valuation of 24.4. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/parkev for the 10 best stocks to buy now. So there you have it, 10 growth stocks to buy in April. So let's recap. First, we had Airbnb and Disney. Then we had Salesforce and Palantir. Then we had Microsoft and Alphabet. Then we had Visa and PayPal. And finally, we had Adobe and Fiverr International. Those are my 10 best growth stocks to buy in April. I hope you've enjoyed this video. I've hand selected certain videos that I think you're going to enjoy that are popping up on your screen right now. So please click on one of those and I'll see you over there.